Hey everybody, this is the market update video, and there's quite a bit of stuff going on in the markets. It's definitely time to be a little careful. Here we are looking at the spider chart. So let's just discuss what happened today, because a lot of news is happening, and it's not just from the United States. It has a lot to do with emerging markets, Turkey in particular. So this morning, the S&P looked like it was going to bounce a little bit. However, I think the it got overwhelmed by sort of troublesome news coming from the emerging markets, Turkey in particular. And so the S&P actually went down today. It went down all the way to, this is of course the spider, so 177, 176, so which means around, 1770 in that range. And then it bounced back and it actually went positive for a little bit. You can see it bounced all the way back and it went positive, and then by the end of the day, in the last 1 hour, it's gone down again. It's closed in the middle of this bar. Now I've got three moving averages going on here. The blue line is the 5-day, the purple is the 20-day, and then this gray line is the 50-day. Now, if you just look at the charts, this looks very ugly, and the obviously the S&P has broken below the 50-day chart. It broke it yesterday itself, but today it never even came close. So, certainly something to be concerned about. The only consolation that I see from this chart is that now we have two bars outside of the Bollinger Band. So, which means the 95% of the moves are inside the Bollinger Bands. This is a two standard deviation Bollinger Band. So, which means, normally you would expect a bounce back into the Bollinger Band. However, technicals and charts, the chart reading is fine. At the end of the day, the markets are going to do what they do based on overseas news and events and things like that. So we'll have to see what happens. But just looking at the charts, the only saving grace is that it's way out of the Bollinger Band, and statistically speaking, it should come back in. But definitely a time to watch out. Now, the other news is Apple reported earnings. Now, in the after hours, it's not showing a bid and an ask, but Apple's gone down about $30-40 in the after hours. So, tomorrow, as if there was not enough uncertainty in the markets, Apple may take the market down too, especially the Nasdaq. So that's something we'll have to watch for. Google also went down pretty hard today. It went down to about 1080 or somewhere there. Yeah, 1080, and then it bounced just like anything, all the others. And you can see there's very high volume, today. So certainly a lot of selling is going on, and same thing with Priceline. You can see that it went down about $36 on pretty high volume, the highest it's been in about 2-3 months. So all of this points to very bearish outlook for tomorrow, and in the coming days, actually, not just tomorrow. But like I said, the Bollinger Band is probably the one thing that is a saving grace. And then today, the funny thing was gold also went down. So generally, gold has been inversely correlated with the S&P. And now gold, today was the first day where even the S&P went down and gold also took a beating over here. So anyway, those are the larger picture things going on. There's plenty of stocks that are in the move. I think a lot of these could potentially set up for a good buy at some point. We just don't know what that point is, so you have to wait until this mayhem ends in the market. There's a lot of bad news coming out of China as well, and then there's another PMI report coming out this Friday, I believe, from China. And then we also have the FOMC announcement on Wednesday, which could potentially move markets. So a lot of stuff going on. Certainly a time to be careful. VIX has gone up. As you can see, yesterday it was 18. Today it actually went down a little bit, but it's still 17, which is pretty high. So that's where we stand for today. We'll speak to you tomorrow.